Hi guys, it's Thomas here from COTbase.com. Welcome to a weekly COT review. Today we're going to be looking at the 46th COT report of 2020, but before I start, if you're new to COT analysis, then do check out our website. We have a lot of educational material, not only in written format, we have some very useful videos as well to help you better understand what COT and COT analysis is all about. So back to the review, and starting off with our first market, the heating oil, where we have a 38% change in commercials positions. Huge change size. If you look at it on the chart over there, the magnitude is quite visible. And if you compare that to the past 52 weeks, there's no question that is the largest change on that time horizon. So it's very, very large, suggesting weakness coming in the next couple of days. Moving on to the 5-year chart, we can examine the COT Extreme situation. Not much to talk about. If you check that, it is more or less in between the two major extremes. So it's really the COT change signal this week that we could act upon. The next market that we are going to analyze is gasoline, another energy market. And on this 1-year chart, the change size could be more easier to see. Again, talking about a larger than average change size, nothing as big as heating oil, but still something that you should consider. Definitely, if you compare that to the past 1 year, it's one of the few larger ones. Again, bearish COT change signal. We're not surprised to see some sort of correlation between the two markets. Moving on to the 5 years chart, you can see that here we are, I should say, a little bit closer to bullish extreme levels. But nothing exceptionally obvious, I should say, from the extreme side. So you don't really want to focus on this market if you're looking at the extreme, I should say. Feeder cattle, the next market for the review, again, a 17% change in commercials positions, much greater extreme, as you can see in large speculators. And if we switch to the 1 year's chart, there you go. So a pretty large change in commercials, but an even greater change in large speculators. And if you compare that to the 52 weeks time horizon, yeah, it's large. It is, again, a bearish extreme, COT change signal. Suggesting we may see some further declines this week. Jumping to the 5 years chart, you may see the extreme situation. I should say, well, if you look at commercials, they're closer to the bullish extreme levels. Large speculators were at a very significant extreme back over here in October, just marking that bottom over there in the chart. And of course, also if you look at small speculators, they were pretty extreme as well, just above the zero line. And you can see how well that coincides with bottoms whenever that happens. So that was the case. We're moving away from those levels, large speculators more so than commercials, I should say. Of course, this suggests we may see some further higher prices rallies coming in the next couple of weeks in feeder cattle. The next that we're going to do is switch over and look at the large speculator COT extremes. We've got the Japanese yen on top of our list with a 209 report extreme, and that can be seen on the chart over there. We've seen greater extremes in the past. You may see this territory over there just at those tops. And back in 2016, we have reached those levels. We can state that, which suggests we may see some weakness coming in the medium to long term in the Japanese yen, definitely against the US dollar. That's what the report suggests. Another currency for the second market is New Zealand dollar. Here we have a 130 report extreme for large speculators. We've seen greater extremes in the past, like the one from April. Beautiful example for successful bearish extremes. Another one from July of 2017. But of course, caution is advised. These extremes can, strengthen and become larger week by week for many months even before the market reacts. It's good to know, that stress levels have built up in this market, and eventually we are expecting a shift in the trend. Right now, we are still, I should say, under the influence of that bullish extreme from October of 2019. We had some relative extremes, bearish extremes, for example, over here. But we, we have not reached those extreme levels that I was just showing to you right now. There's still some space left for all major participants to move to those positioning levels. The next market, heating oil, we talked about that. So palladium will be the next market with a 36 report extreme in large speculators. So not a big number, but if you open the chart, of course, you get a chance to examine that in relative terms, comparing it to the past. In this case, we're looking at a 5 years chart. So it's definitely visible that we are still closer to bullish extreme levels. So back over here, January of 2018 was a bearish extreme that actually managed to push the market lower for quite some time. Then we reached that bullish extreme in August of 2018. And since then, we've seen the market really significantly rise. So we're still close to these bullish territories. So the report does not suggest we should expect a shift in that rally, this uptrend that we are witnessing. The report suggests we could easily see palladium prices go even further higher for many months or possibly even years ahead of us. So that was all for this review. Of course, don't forget that these COT reviews that I do on a weekly basis show you a brief picture of the markets. There are, of course, many more markets to analyze. I only show you a few categories. We always analyze the classic or so-called legacy COT reports, but you can look at newer reports like the disaggregated traders and financial futures or CIT commodity index traders report types. You can also look at futures and options data type and options only data type. So if you dig deep at COT base, you may find a lot of very useful tools that you can use to analyze the report. So thank you very much for your attention. I hope you enjoyed this review. I wish you a pleasant week. Take care. Goodbye.